Hello, everybody, and welcome to week 24 of 2025 for the Build Weekly Roundup. You've got myself, Cameron Otsuka, and Matt Dines here to go through some of the new updates in the last week. I think there's been a lot going on in terms of U.S.-China trade talks that I know we're going to want to get into a bit here. We'll probably start with a deep dive into what's been going on in treasury markets, move on from there into the one big beautiful bill act. I forget already how the bill has been named. It seems like there's always an extra B in there somewhere. Um,
O triple B A
O triple
is
B
how
A.
Scott Bessent said he's referring to it yesterday in his House Ways and Means testimony. So, I mean, it's a ridiculous name to begin with, but O triple B A is,
That'll
I
be
guess,
easier
as
for me to
as
remember
as
than
good as anything.
right.
Yeah.
Otherwise, I'm just fumbling over. Is it the beautiful big bill? Yeah. So we'll go through that, talk through kind of what Matt's seeing in terms of the reconciliation bill, move on into those trade talks I was talking about between the U.S. and China, and then we'll touch definitely on what's going on across some of these cities. You've been seeing LA in the news, for example, but just diving into what's kind of underlying all of that, and how that relates to markets. So just to kick us off here, Matt, I'll let you jump into the treasury auctions and things like that. But from where I've been sitting, what I've been seeing, definitely not as a professional trader here, but I've noticed several news articles pop up and mention that the 10-year treasury auction seemed to have gone well. It sounds like today was also the 30-year auction, also seemed to have done well. But contrast that with some of the other auctions, maybe not going as well. So maybe walk me through what you're seeing in those auction markets.
Let's leave it on this front slide here, because I want to talk about that to lay the context, and then we'll get
Yeah.
into the treasuries. But as you said, yeah, duration was well bid today. That 20-year auction that tailed, roughly 3 weeks ago. At this point, um, just totally different backdrop today than what we saw at that prior 20-year. We'll get into that in a second, but I want to just leave it up here. What are the big three developments this week? Um, Cameron mentioned in the intro, it's O triple B A, the London trade talks, and the U.S. unrest. Um, and I think, in terms of the bigger picture narrative, what this era we're progressing through, how do you square everything here to make sense? Let's try to do that first. Um, all of these things are these three things here are kind of separate streams, but they're all converging onto one thing. And I think if you actually um, I'll explain, my framework for how I view, these key developments are progressing. What's actually going on, right? Because if you just tune in to, CNBC or Fox News or whatever, or even your front page kind of headlines from New York Times or Financial Times, et cetera, it's very difficult to make sense of what in the world is going on here. So I'll try to add some perspective here on the geopolitical front, what's actually happening, and then translate that into what's going on in capital markets with treasuries being kind of front and center this week. So to start, the OBBA Act, what is this? This is actually, as everybody knows, November 5th, we had a Republican sweep, House, Senate, and President. Um, and this is part of their kind of, I guess, the legislative change, right? We're going to get a budget for the federal government for next fiscal year, which starts on October 1, I believe is the actual cutoff date. The fiscal year ends on end of September for the US technically. Um, so everything we've been running, just for context, on a spending plan has been kind of operating under what the prior Congress and administration agreed to, right? Which was totally different set of power brokers, with the keys to the car. So this OBBA is the kind of the first kind of fiscal year you'll see where this new policy regime comes in town and sets its priorities for federal government spending. We know in general what that's going to look like, right? With you know, what's proposed in OBBA at this point. You might see some, negotiations, some sanding down of individual details. You'll hear like the SALT, state and local taxes deduction. Maybe there's some wiggle room left on that, to get whatever votes you need to achieve consensus and pass this thing through the House and ultimately work its way through the DC apparatus. But by and large, you know what you're going to get. Like it's already in there. You're going to get cuts to federal programs for things like Medicaid, food stamps, et cetera. That the government and a fiscal challenge, as it's kind of broadly accepted that the government finds itself in our current era. You got to find ways to cut somewhere, and this is the sad facts of reality. There's certain things that DC is willing to cut, and certain things that it can't cut. Things like interest payments, right? What the bond market charges you to fund yourself, the federal budget. There's things like defense, where, well, in a time of geopolitical conflict, which is becoming more and more pressing almost by the week, with each one of these weekly roundups we record, uh, you know, pulling away from national security and defense seems like a tough pill to swallow in times of conflict. And then you get into like Social Security, which is to change that one, right? It's going to need its own legislative process to actually implement and achieve reform, which may be down the road, but that's not going to happen this summer. And then that leaves you with the sad facts of the matter. What gets cut? Well, it's the spending on support programs for the people in society who have the least ability to absorb it, right? So this is just the I mean the sad situation that this is. I don't see any easy way to make everyone happy. And there's definitely like parties in America, U.S. economy, who are going to be left out. So um, definitely don't want to sound inconsiderate to certain groups and constituencies who are,
Most
reliant on
affected by
government
these.
support, government
Yeah,
programs. Yep. But this is the facts of the matter are like the OBBA. It's almost certain bound to happen. Like we have to get some sort of reconciliation or spending bill. But I mean, I don't think it's controversial to say this, but not a hot take. The U.S. government is going to continue to exist next fiscal year. It will raise Treasury debt. We will see the debt ceiling raised. It's just a matter of that uh, process working through the DC Beltway. Now, adjacent to that, you've got what's going on with these London talks um, between the two largest economies in the world, where the way I view this, you've got a renegotiation underway of the original, Nixon agreement with China to open up relations in 1973, I think it was. So, you see individual issues like, the US has realized, certain rare earth minerals, metals that are key for
military
electronics,
jets.
magnets,
Yep.
military, et cetera. Yeah, things that the US can't do without. Um, that's part of, um, one of the specific items on these docs, like how on the docket for these talks is how is the U.S. going to continue to source these, at what price, um, and just kind of a renegotiation. Like there's essentially what you're saying is, um, hey China, you've got a new business partnership, a new regime. You need to renegotiate. And what do I mean by that? This isn't the same power faction, like the head of the you know who's running the show essentially at the top of society. Who is your handshake across the table actually with, if you're the Communist Party in China? Well, I think what's actually going on is you've had a transfer of power from one group who were, running the helm of the American society and economy, you know, during the existing kind of agreement in place from the 1970s up until, you could say, the first Trump administration in 2016 to 2020. But that handover wasn't fully, completed, as you did see a transfer of power back from the Republicans to the Democrats in 2020. I think what we're seeing now is, the Trump team and the political faction that they represent in American society, trying to, entrench themselves and say, hey, no, you got to renegotiate this deal with us for the new terms, because America's under new management for the going concern, or for foreseeable future. So that's what I view is going on in London. And then this US unrest that just happens to spur up, right? Why are we seeing riots, um, just pop up spontaneously? And granted, part of it is just summer. Um, you you just think back 4 or 5 years ago, right? Summer of 2020 was also a summer of unrest. Technically, that was the last summer that the Trump administration was in power. So we're seeing another one of those. This may be organic to some degree. There is some, uh, grassroots pushback against the Trump administration and the Republicans in control of Congress and the Senate. But it's also, I don't think this will be controversial, this take, but I don't think it's not grounded in reality at all. You're seeing political figures from the opposition stoke and really encourage the unrest. So give and take. But the way I view this is, all right, the new management that's negotiating this deal with China, right? To some degree, this is the action they have. This is the only thing they can do to uh, push back against the success of, things like the OBBA and a uh, new trade agreement, new rules of engagement laid down as far as the economic order between the U.S. and China. So hopefully that adds some clarity to a very muddled, situation that is just developing, day by day in real time. And the reason I titled this "Last Chance to Hit the Exit" is really we're seeing an escalation now, um, and it's starting to look to me like, uh, did we pass the last exit, right? Before, we head into the, yeah, over the edge, over the precipice, if you will, because, if and when, the violence starts to pick up at these protests, or just all it takes is one thing to go the wrong way, um, for like these situations to materialize into something much bigger, right? The next stage of this geopolitical conflict, that we're seeing really trickle down into every interaction we have in society, every headline, it seems. Um, it to me feels like we're at like that last stop before, do the leaders from both sides really pull back? Is there an opportunity to create partnership, um, between each other? It's seeming more and more to me like that opportunity uh, for some sort of compromise is slowly
It's
slipping
dwindling.
away.
Yeah.
If not already.
Yeah, and I think I just want to add to that. Like I I see all of these protests and things like that, and like you're calling out, there absolutely are some folks that are grassroots things like that, but you're also seeing these groups come out and they're finding out that they're actually semi-professional protesters, right? They're going around city to city. They're trying to organize people to actually do these, maybe not necessarily outright saying that they should become violent, but definitely saying, hey, we want to go and throw items at the police or whatever it is. And so you're seeing that start to crop up across the country. So the question, like you're posing, is where's the funding coming from to then fly these people around? How are they organizing in this way nationwide? And
I,
not trying to get into conspiracies here, but it definitely seems like there are certain factions that are more organized, more well funded than others, and they're showing up some of these protests in spots like Seattle, where we're from, L.A., Chicago, and cities like that.
I want to be very like let's. I think both of us agree on this. We want to be very careful about sticking to what's observable, what we can prove, what we can verify, um, and yeah, just stay on top of our skis is just a good operating principle. To make sure we're leading our audience in the right direction and trying to understand and explain all of this kind of just craziness that is just materializing in this world around us. But as far as what is a group of people standing around, like, aggregating for protest, really enabling? Like it's very clear, like crowd mentality. Yes, there's rights of free assembly. You have your right to express your grievances against your government. It's one of the tenets of our constitutional framework and Bill of Rights. Um, but what can happen in once you see a large crowd aggregate, in public spaces, history shows this is those are the times and opportunities that can create, I guess we should just like the what's the word I'm looking for? The kindling on the floor of the forest, which
Right.
all it takes is an agitator, right? Someone who wants to move the crowd, turn a peaceful protest into a mob. All it takes is, one agitator or just a little push in one direction to sway the crowd, um, in a direction where things get really ugly. So you can see where things are like just we're walking right up to the brink to a very dangerous place, I think, for both sides. And at this point, I don't know uh, if if there is even an off ramp available. But yeah, I just wanted to caveat that we'll stick to things we know, but what we do know, there's people aggregating throughout cities. It seemed to just really spring up in LA last week. The natural response to kind of mob gathering, or sorry, large gathering where you can get the situation turning into um, violence, is for the government to deploy, um, the military to make sure order is maintained. So this is kind of a very interesting place we've walked ourselves into as a country. I guess we'll just leave it there.
Yeah, well, I was gonna say, I think to then flip us back to our first topic, which is the O triple B A. I think you called out a really good point here, which is that, sorry, I want to make it very clear here that we're not necessarily talking about Republican versus Democrat, right? When we talk about the transfer of power, there's certainly some Republicans in that party that are not happy, right, with some of the pieces that are going on here. So I'm not trying to say that this is a red versus blue debate, but in terms of the OBBA, it is tends to be a Republican bill. Obviously, the Democrats don't have that power in Congress to be able to oppose this, and you're seeing it, like you're calling out, Matt, kind of flashpoint into other areas instead. So maybe can you walk through? I think on our title slide here, you've got actually the poly market odds of the reconciliation bill passing. Can you just walk us through, maybe some of those points that you're seeing within OBBA that kind of led you down this path to see, oh, this is the reason why. These are the pain points for the opposition, let's call them, that has led to these flashpoints that you're seeing across society.
All right, so there's two fights going on. It's the you can see the inter-party fight and the intra-party fight, and so One of those is much more transparent. Let's just start with the Republicans, like the intra party, just call it like conflict, right? You got
Disagreement.
a
Yeah.
couple disagreement. Yeah, you got a couple of holdouts like Thomas Massey, for example, like a couple votes who say no, like do not increase the debt. Like this is going to increase the debt by $2 trillion. We want to see balanced budget, just like things like that to rein in order. Um, and I think ultimately, this is a complicated way to describe this, but the U.S., the federal government, the fiscal situation. Um, I'll make an analogy here. You've gotten yourself to a point where the patient is extremely sick, right? Like just morbidly threatened. Um, we can go through healthcare conditions, to make example, but everybody knows what it looks like for someone to be like in very bad health. And so there's e- everybody I think on the right is aligned around we need to reverse this, like do something about this. Um, and there's a kind of a difference in approach on how you restore the patient back to health, right? And if you think about some of the no votes, you say like, oh, over my cold dead hands, like will I vote for raising of the debt ceiling again, another, let's say, $2 trillion, $3 trillion.
Right.
um, yeah, that's uh, intellectually consistent in terms of positioning with what a lot of these members to Congress have ran on, been elected on, and are going to hold true to their principles. But in reality, like when you're that sick, right, you can't just cold turkey and start doing CrossFit tomorrow, right? Um, you've got
I've
it, or
tried. It's
like
really hard.
today, you can't, yeah, yeah, that first day of CrossFit after you've had a long time off, yeah, you will feel light in the legs for sure. Um, and just imagining Cameron's in good health. He's fit, all of
Definitely
that.
not peak physical fitness by far, but yeah.
But it compared to someone who, let's say, has not taken care of themselves, neglected themselves for, generations, multiple decades, you can't just turn this off and switch over to that lifestyle right away. So I think there's that degree, like that kind of disagreement within the Republican bloc itself, which has always kind of existed for the last 10, 15 years. You've seen things like the Freedom Caucus, et cetera.
Right.
You get 7, 8 votes, and you can kind of hold back and like get a lot of things you want out of these bills. You can't control the process, you can't control the legislation, but you can definitely get more than what would otherwise be your fair share of um, just like throw-ins or bonus like add-ins like for your congressional district with that strategic approach than the remainder of the voting coalition. uh so that's the intra party conflict on the Republican side, which I don't think will be the blocker, right? That's not gonna, like, they'll get through that. um What I do see going on right now would be like the difference between the majority and the minority, right? The minority want to, it's the same thing. Like it's not credible for either side of the aisle at this point. Once we get into these budget situations or these reconciliation bills, um, for one side say, no, we care about the national debt. It's like, no, you don't. You both do it. So you're both running it up. Um, so there's no, pedestal to stand on for either side here to take this claim. Like you're threatening the fiscal soundness of like
That's a
the
key
federal
point I think I
government.
want to
All that.
highlight there is like you hear these sound bites from some of these senators and Congress people saying, "Oh, like the CBO says this is going to increase the federal deficit by trillions," and then you sit there and say, "Well, what was the alternative?
Yeah.
Your
It's going to
proposal would
go.
have been worse or the same, right?"
It's
So
Yeah, it's going to go up either way. And the question is who gets what, or where does the spending actually go? That's that's where the battle is. And there's a between both sides, there's a different set of priorities. Now the Republican Congress, I think its majority is like 2 votes, so it doesn't have a huge margin. So it needs to get its entire coalition to vote, and this thing will pass. Like we're gonna find that middle ground between the bid and the ask that satisfies all constituents, and um, the aligned government between Congress, Senate, and executive branch. Like they're going to have this done by the next fiscal year. And that's what that prediction market is showing on the left. I guess the big thing is the runoff and the June series, which I think is in green. It's just going down and to the right. So this isn't going to resolve itself within June, but July, August, there's still time to get this done. And it's just, um, it's just going to take, weeks, potentially months, a couple of months to put this together and ship it, if you will. And that's where you see this showing up in the Treasury auctions this week. So now we can finally talk about Treasury auctions and what's going on there. So every week we have the auctions, standard on the runs. I'll talk a little bit today about the pair on Mondays that go through the 3 6 months, 3 month and 6 month, and then on Thursdays we get the 1 month and 2 month, or they call them the 4 week and 8 week. Um, but and this week we had some special that some auctions that take place every month for the 10-year bond and the 30-year bond. And this is what, Cameron uh, kind of telegraphed at the beginning of the show. These bonds, as opposed to the 20-year, which 3 weeks ago tailed by, about a bip and sent long end rates higher. They broke five. They've since come back in a bit. This week's the 10-year and the 30-year. They actually traded through at the auction. So different set of results. Just kind of highlights where the bond market thinks we are at this point in time. Let's talk about bills today. The 1 month T bill. Um, Big thing happened here. So we had technically that's 4.08%, the closing rate on this 4 week T bill auction. Came down 9 bips from prior week, but we're at now the front end of the curve is now at its lowest point since Q2 of 2023, which was that period right after um, the collapse, if you will, that first wave where we saw Silicon Valley Bank. Um, who was the one in New York? Signature Bank,
Signature, yep.
and then Credit Suisse, right? Those were in March, and then T-bills, the front end uh, got bid hard. I'll show you on the next slide. It was the false, breakdown in yields because Powell was very clear. Hey, we're going to keep hiking here. But we're now at the lowest yields on the front end, and the first maturity, T-bill on the run, the 28-day. This is the lowest that yield that auction has closed at since April of 2023. If you remember the last kind of bank roll up to go through, and uh, that wave of the first half of 2023 was First Republic being absorbed into JP Morgan. So we're now on the other side of that, and like on the bottom of the hill. You'll see it in the bid to cover, one below there. Bid to cover was strong on the 4 week, still right about where it was at last week's auction, that 3.22. What that means is, hey, we sold 65 billion in 4 week T-bills. What does that big to cover mean? It means we had 3.22 times that, so over 180 billion dollars of uh, tenders, bidding for that security showing up at your auction. So strong demand remains in the 4 week T-bill.
And something that popped out to
Now,
me that I wanted to ask you about was actually this direct versus indirect percentage, right?
Yeah,
If you can maybe explain, if I guess what this means, it means that there's other investors that are not the actual dealers themselves who are actually putting these
yeah.
bids in. Is that, do I have that understanding correct?
Yeah, so those would be, so you see the auctions broken out into three sources of demand. So what isn't shown on this table is the primary dealers, which is basically uh, if you see the primary dealer takedown, the dealer is taking inventory, like any excess that they'll then have to sell, um, into their own distribution or client bases. So direct is you can think about that as like that's the final endpoint of a sale. Like most of that is going to be US financial institutions. And then indirect would be like a bank like FRBNY is going to custody that bond for like a non-participant in the regulated US financial system. So it could be like offshore
Got it. So then a different way to maybe read this
lenders.
is the sum of these, subtract that from 100. So it's like 3.3% ended up being custodied or held by dealers themselves,
Taken down.
taken down.
Yeah, the sum would be like a little bit under 15% there, but yeah, that would be, yeah, dealer takedown.
Got it.
And
Got it.
sometimes dealers want to hold some, if you hold the 4 week bill, that's like collateral you can take to SOFR or repo window and borrow against it. Now, granted, you wouldn't want to do that because SOFR is about 4.3 and you just bid 4.08. So you're going to be
You have
paying
negative
like
carry.
if you borrow against it, you'll have negative carry, which isn't like that's the wrong direction for you're trying to make uh, positive net income. Um, but okay, the interesting one I thought was the 8 week, which you saw the bid to cover drop from 3.38, right about that 3.2, 3.3, kind of ballpark that the 4 week was at last week and still is this week. I dropped to 2.67. So you saw a lot of bids or tenders just removed. And if you think about what's going on here, what's 8 weeks from today, roughly August 12th, which is lining up with this process. If we don't get the reconciliation bill passed, if we don't get the debt ceiling raised, well, the Treasury won't be able to issue uh, more government debt. And then you run into the like a scenario where, hey, potentially you could, if things get real bad and Congress lets this go off the rails, um, you could see a delayed payment from the US Treasury. So I think you're starting to see this is what happens every time we run up to the debt ceiling, right? We let it get close. We've been through this rodeo multiple times before. You'll start to see the bond market, money markets, like the capital around the globe start to try to avoid those dates, that windows where it looks like this this X date, this phenomenon we started hearing in 2020. Was it 2023 the last time we were in this and really started to
I want to say so,
yeah,
yeah.
yeah, skirt this? They'll start to try to avoid that window, and you'll see because of what this that risk of just it's all logistics, process, the legislative hurdles, all of that. You'll start to see um, portfolio managers, investors, all of them uh, start to charge a little bit more of the yield premium to own those dollar IOUs on that date.
And so,
Okay, so
just quick
go ahead.
question on this. So if if you see the bid to cover ratio come down, would I expect to see that actually move to other areas of the yield curve, or is this a case where if folks were looking at the 8 week anyways, they would just say I'd hold the capital on my balance sheet, wait until I have more clarity, and go back into the 8 week because I don't necessarily
Yeah,
see an increase on the 30 year, etc.
yeah. So let's say there's 3.22, bid to cover on 65 billion in securities. Like some of these bids, like if you think about it, like your once you add on, your next bid after $181 billion, you sort them descending by the most competitive. And at the top of that 3.22, like let's say we filled 180 billion in in the 4 week T-bill this week, and the bid to cover was one. the further out you go, they're just going to be backbidding these. And it's like, oh, a 12, a 13%, like things where this auction would never clear out. And if they did clear there, what you would do is you would tighten down supply so that you didn't close there. So part of that capacity, like how much of it is real, like how much of it represents like real balance sheet capacity that would actually fund the treasury, like it all just comes down to price, right? So I think the answer there is, all right, if it's the 181st billion-dollar, stack ranked and bid, is that real? Well, I don't know, maybe. But the bids that dropped off between that bid to cover of 2.67 and 3.38, like some of that was real, right? They backed up what they would bid at, right? And you see that like 1 week, yeah, difference. Last week's 8 week T-bill closed at 4.225. This week closed at 4.38. So the bid dropping off, you can think about that. You can calculate how many billions of dollars worth of uh, bid volume showing up did it take to move the clearing yield back 15 and a half bips. Um, but it's nonlinear, so you can't necessarily say like, all right, did that
A
delta
direct
between
correlation. Yeah.
2.67 and 3.38 that they covered go somewhere else? It may have extended out into um, the 3 month or 6 month bill auction earlier this week. It may have gone into coupons. Like we just it's extremely complicated to model out like between each auction because you don't know like, hey, what did JP Morgan do? How did it adjust its strategy? Because they also have they have each financial institution is looking at their own return on equity targets, their own cost of financing, uh, what they want to see, from return on assets on their balance sheet, what weights they would hold against each asset. So it's complicated. Is the is the real answer there. But I think the real thing is to get or the important result is we saw two things. We saw the front end, the 4 week that got bid. So if you go to the next slide, Cameron, yeah, you'll see this. So this is just kind of some corridor tracking of key reference rates. So you got things like SOFR, Fed funds rate, interest rate on excess reserves, the 1 month T-bill where it trades uh, in the secondary market, and the yellow dots are where the auctions close for the 4 week T-bill every week. I circled in yellow. You've now got a trend going back 3 weeks. Like you've got the 4 week T-bill closing below the bottom of that corridor. So you see the Fed funds range or the reverse repo, where the Fed wants to position the rails here. Well, now you're seeing the 4 week T-bill close at yields below that corridor, which is one of your first signs. You can have a false breakdown here. It's definitely possible, but you generally see those on the way up for money market rates or deposit rate, overnight funding rates. Um, in a downtrend on the money market, overnight rate cycle, short rate cycle, those breakdowns generally precede policy adjustments. So I think what we know now, you have alignment, like the executive branch very clearly, like Donald Trump is publicly goading Jay Powell, like cut rates.
He
Why aren't you
wants to
cutting
cut the rate.
rates?
Yeah.
It's a it's a matter of time. This is just one signal you need to see. If you're the FOMC and you're taking votes, you need to look at the rest of the economy as well. What's going on with your other core objectives, and PPI, price stability, unemployment, financial system stability, and ensure the government has the ability to fund itself. But what we're seeing so far, I think the way I read today's bills auctions was the front end is starting to want to come down. Like we're like this is giving you from the FOMC standpoint, like the first signal that hey, you might be okay cutting rates right now. Like granted, what we did last September you don't necessarily know how the long end is gonna appreciate that. They may reject it and sell the long bond. So that remains to be seen. Um, but front end here, you're starting to see uh, what you would expect for a future cut to short-term policy rates.
Got it. And
And
I'm
then on
seeing
the
that here in that
on the
4 week. Is that correct?
yeah, yeah, this is 4 week, and then on the 8 week, what we saw, I think that behavior is consistent with that X date. Generally, investors do not want to be anywhere near, um, the epicenter of the problem if Congress lets this thing, you know, blow past their desks, right? So I think that's what you're seeing in the 8 week right now. And this is just, a situation that over the next 6 to 8 weeks, this is a very key period for all of these things coming together, right? And we'll see who wins out. Right now, the Republicans they have possession of the ball. I'm going to make football analogies here. They have possession of the ball. They're on offense. It's their turn. They're trying to make something happen. So they need to see OBBA through. They need to organize themselves and hopefully kick a field goal or a touchdown. And if you're the opposition, the Democrats, you're playing defense. Um, and part of that defense now is stirring up. You don't have the votes to block anything, so you need to call out, your coalition to hopefully peacefully protest. But that's the way I view what's going on. I hate to veer into the political, but it does impact the sovereign debt, yield curve, and it really just dictates, everything we're talking about on this show, bond markets, asset prices, gold, Bitcoin, etc.
Absolutely. And so then, do you want to move forward then to this 26-week bill? You've got the high discount rate. I'm going to flip it over to this slide here. You plug
Is
this
this
one
the
in,
one with the
and
green? Is this the one with the green dots? Oh yeah,
uh,
yeah. Okay, yeah. This is what's telegraphing. Yeah, exactly. Okay. This is complicated. This is one of my custom Bloomberg charts I like to follow with the 3 month, 6 month bills that go off every week. Every Monday there's an auction for you know multi billions of new debt for uh, bills maturing in 3 months and 6 months. They take place, in snapshot and tandem at the same time. So you see where the yields are for those two different front end maturities. And what I want to highlight here, first off, the top of the chart, let's just focus on that. The bottom, the red and the white, that's just the auction size for supply. I think the bottom, all you're seeing is it's uh, the amount of capacity right now for money markets to take down and fund federal government debt is flat. Like for the last 18 months, 2 years, the bills curve has been, uh, or sorry, the bills issuance has not been growing too much for the 3 month and the 6 month. On the top, the green and the red line, that's the slope um, of the difference between the yield for the 6 month minus the 3 month when those auctions take place, right? So if it's above zero green, what that means is your yield for 6 month a 6 month maturity bill is higher than your 3 months. So that would be a positively sloped front end of the curve in money markets. The red, if it's negative, that means you've got an inversion between 3 month and 6 months, right? Uh, which would suggest, I mean, a lot of things, but it would suggest ultimately like you've got a liquidity preference. You want to um, bid longer maturity bills higher than you would the front end. Um, what I find interesting here since 2023, right? There's an extreme correlation, right? The more bills you put out in terms of supply, the more money like those are. Um, and these bills are, the lowest haircut collateral in the overnight money markets. So you can basically trade these for bank money which is liquid money in the private economy, in the real economy for goods and services. Um, but what you see in the inversion of that 3 month, 6 month in auction, it's starting to correlate very heavily with commodity prices, right? So what I'm getting at here is the cost push inflation that looks like this dynamic is setting up, or not, it's now tied to the hip. When that inversion starts disappearing, slope starts moving positive, which would be correlating with that 3 month yield coming below the 6 month, which encourages more dollar bank money borrowing and overnight funding markets, more repo. Um, what you see is a correlate like positive correlation between that spread with commodities prices. So key one here I put is copper, which is, if you heard the analogy, Dr. Copper, like as your benchmark, your real-time indicator for the real economy. Copper demand correlates with electricity production, infrastructure, EVs, like all of the
Anything
above.
that's electronic. Yep.
Yep, in the real economy. Not so much in housing anymore, right? Like all the copper's been stripped. It's all PVC these days. But it's your necessity for electric or electricity transfer, for sure. And so what you see here is, as this curve uninverts, if you do see the 3 month come in or the front end come in, that has been correlated for the last like 18 months, 24 months with your industrial metals, or your BCOM, your Bloomberg Commodities Index, which includes all of your raw commodity inputs in the economy. It's starting to look like, all right, if we do cut the front end, be prepared for cost push inflation on commodities. So that's what I'm watching out for. Follow copper closely throughout the next, 6 to 8 weeks, as this kind of complex political process, these negotiations, discussions, uh, conflict between, you know, global political factions is I don't know. I don't even know if it's close to settling out, but escalating is definitely uh, probably an accurate term. Watch how commodities respond to the progression of the headlines on those kind of themes that we're pointing to in the three items listed on the intro slide.
Yep. I mean, I think that helped me understand kind of how all these are tied together, right? I know you and I talked briefly yesterday about kind of how this is affecting, or how this is showing up in these protests that are springing up. I had a lot of questions of just how all of these could be tied together. Conceptually makes sense, but I think what you've done already to kind of tie those dots together has helped me personally, hopefully for our audience as well, understand that what you're seeing in the news, all the fragmented sound bites, all of the clips and things that they push a certain part of the narrative, but you really do need to zoom out and kind of see the whole picture to understand how it's all tied together. So thanks for that, Matt.
Yep. It's just one guy's view, but hopefully makes some sense of these crazy times we're living through.
Yeah. Well, I think that's a good place to leave it for today. I think we've done a lot here, and I know we don't want to try to veer into the hyper political. I think we all have our own opinions on this one, but end of the day, trying to, like Matt stated, trying to keep it stick to the facts, have it relate to the market, and I think we've done a good job of that so far today. So, do you feel like a good spot to leave it there, Matt?
Let's leave it there and pray for the best.
Absolutely. All right.
Take
Well,
care of
thank you everybody
yourselves.
for watching today's episode of the Bill Weekly Roundup. Again, I'm going to hammer on, if you don't already follow us on YouTube, on X, on LinkedIn, please do so. That definitely helps us out. Hopefully, we're providing you with content that you're enjoying watching, you're learning something new. And again, reach out to us if you have any comments or feedback. We'd love to hear from you all. And see you again next week.